Hello everyone, welcome to this second edition of Harvest Asset Management's market update for 2026. As concerns the CEMAC macroeconomic trends, early 2026 has been marked by a sharp decline in inflationary pressures, with inflation expected to fall to 1.6% by the end of March 2026. By December 31st, 2025, inflation in the CEMAC zone stood itself at 2.1%, confirming a broad downward trend by all the CEMAC states. Cameroon remains the main driver of these regional inflationary pressures. On the other hand, Chad continued to experience a deflation, posting a fourth consecutive month of negative inflation of -2.6% by the end of December 2026. Given these prevailing inflationary pressures, the central bank chose to maintain a status quo during the April 2nd, 2026 Monetary Policy Committee meeting. As concerns annual average inflation, the decision to maintain the current monetary policy stance reflects geopolitical uncertainties that could pose a risk of reviewed inflationary pressures in the upcoming months. Consequently, despite these easing inflationary pressures at the end of March, inflationary pressures could re-emerge in the upcoming months. By so doing, our baseline scenario points to a halt on the policy rates by the central bank in the June 29, 2026 Monetary Policy Committee meeting. As concerns GDP growth evolution, assuming a Brent price of $63 per barrel, growth in the CEMAC region is projected to decrease by 60 basis points to 2.9% in 2026, before stabilizing itself at 3.1% in 2027, mainly driven by the resilience of the non-oil sector. Growth equally is expected to be supported by Chad in the CEMAC sub-region, with an increase in growth of 5.7%, Congo with an upgrade of 5.3%, whereas Equatorial Guinea is expected to be in continuous recession, with growth projecting itself to -3.1% during the year 2026. This trend is corroborated with the IMF's projection of April 2026 World Economic Outlook. Given the current situation in the Middle East, we expect an upward revision of the macroeconomic forecast in the upcoming months, driven mainly by the rising in the prices of crude oil. Continue with the Brent oil versus inflation in the CEMAC sub-region. As during the 2022 Russia-Ukrainian conflict in the Middle East is expecting to fuel inflation again in the upcoming months. This new shock is likely to disrupt the disinflationary cycle that has been underway since 2026, during which the inflation declined from 6.6% to 1.6% between June 2026, 2023 and March 2026. This risk calls for a cautious approach by the central bank, particularly in an environment where economic activity is being weakened. As concerns the sovereign financial rating of the CEMAC states, no country in the CEMAC sub-region for the 2026 so far has experienced an upgrade in the sovereign financial rating by Moody's, S&P and Fitch. On the other hand, countries like Gabon have equally had a degrade in their financial rating by Moody's and Fitch. Meanwhile, countries like Chad have equally had a maintenance in its financial rating by S&P and Fitch. Moreover, given the current macroeconomic and geopolitical environment, we do not expect any rating upgrades to occur in the short term of 2026. Public security market debt ratio stands itself at 12.1% of CEMAC GDP. Equally, we can see on the graph that there has been continuous increase in the market outstanding debts, situating itself at 9,625 billion francs CFA at the end of March 2026. Despite this increase in the market outstanding debt, the market debt ratio on the other hand had a decrease in the 10 basis points from 12.1% of GDP, from 12.2% to 12.1% of CEMAC GDP by the end of March 2026. As concerns the market capitalization of the BVMAC all share has grown by a value of 1.85% since January 2026. As concerns the debt sector of this market, we have had a volatility in the capitalization of the debt sector due to the fact that the amortization of the sovereign bonds of Gabon during this first quarter of 2026. We equally expect the upcoming months to have an increase in this market capitalization due to the fact that there is going to be an enlistment of the bonds of Cameroon, Gabon and Chad in this bond sector of the market. As concerns the equity sector of the market, we have had the floating capitalization to increase sharply due to the entry of the equity of BGFE in this equity sector of the market. We could have the equities in this market like that of Safacam, SGRE and Socapam to increase. Meanwhile, La Regional has had a decrease in its market value. Equally, in the upcoming months, we are going to have an increase in this market equity capitalization due to the fact that Samba Assurance is willing to raise 5 billion, Renaprof is going to raise 8.4 billion, which are equally going to enlist the market and thereby increasing the market capitalization. As concerns the yield curves, we have had significant yield gaps between Cameroon and Gabon and Cameroon-Congo yield curves. As concerns the Cameroon-Gabon yield curve, we have had the gaps to positively increasing in the short and the long term. This increase due to the fact that the market is demanding for significantly higher yield curves to hold Cameroon-Ghanaian bonds with respect to Gabonese bonds. This increase equally explained by the fact that there's an absence in the emission of Gabonese bonds in this sector of the market, thereby leaving Cameroonian bonds with a higher risk premium. Furthermore, concerning the yield curves between Cameroon and the Congo, the spread between the Cameroon and Congo remains negative in both the medium and the long term. In this sector, reflecting the fact that a higher risk premium is demanded to hold Congolese bonds with respect to Cameroonian bonds. This spread equally moves to reach an amount of 449 basis points for the 10-year emissions. You equally have significant yield gaps between the Gabon and the Congo yield curves. This yield spread continues to widen between Gabon and Congo, explaining the fact that there is a default risk perceived by investors to hold Congo bonds with respect to Gabon bonds, irrespective of the fact that there have been an absence of Gabon bonds in the short term, in the medium and long term in this sector of the market. This spread, which ranges from 88 basis points for 1-year emissions to about 290 basis points for 10-year emissions, reflects a persistent risk premium to hold Congo bonds with respect to Gabon bonds. Some key takeaway points. Concerning the macroeconomic context, we expect a decline in inflationary pressures. We equally have economic resilience driven by the non-oil sector. We have equally had a risk of resurgence of inflation due to geopolitical tensions in the Middle East. Concerning the capital market, we have had a statu quo, and we're going to expect a statu quo on the CEMAC sovereign credit ratings. We equally expect a statu quo during the June Monetary Policy Committee by the central bank to maintain its key policy rates. We equally expect the Congolese interest rates to continue to rise with respect to Cameroon and the Gabon. We equally expect the momentum in the market capitalization to continue due to the fact that we are going to have more entries to the debt sector and to the equity sector of the market. For optimal portfolio allocation, we advise our investors to allocate 80% of their investments on sovereign bonds and 20% of their investments only in equities due to their volatility. With all this, we thank you for your kind attention and hope to see you very soon in July for another edition of Harvest Asset Management's Market Review.